Welcome back, and it's a choppy commodity markets when you look at that, and even as most markets were anticipating a 75 basis rate hike, and that's exactly what we have seen. What the markets weren't prepared for is even more aggressive rate hikes going into November and December, and that's exactly the kind of reaction that we finally have started to see into the markets. As you can see, the gold price is now down $15 from the kind of closing that we saw in the markets yesterday, even as there has been some support for gold because the Russian president has talked about mobilizing more troops in Ukraine, and that perhaps could have been a supportive factor. But the market's now digesting the fact that we are looking at more aggressive rate hikes going forward, and that could really be impacting many of these commodities and currencies as well. We already are dealing with the rupee, which is trading at a record lows, and is the reason that even as the international markets have declined quite sharply, there is a bit of a cushioning that you have seen come in for the Indian markets because of that rupee calculations. So as much as losses that you are seeing for the US dollar, the other currencies perhaps are not there yet. There's a report on Citi that's on your screens right now which suggests that we could be looking at further declines in case of gold. A giveaway in sense of 1650 on the lower side could open doors for $1,600 per ounce as well on the lower side in case of gold. That's what we are seeing for silver as well. Prices have continued to decline, $19 per ounce, just about holding there. And the base metal prices, even as they're not doing so great in the international markets, because you have seen weak data, the US home sales numbers have declined for a 7th straight month for August. We also are looking at weaker numbers when it comes to the Chinese industrial data. There's a report from Rio Tinto suggesting that the inflation and supply chain disruptions will weigh onto the market, and the copper inventories have gained the most since the month of June. So the last 1 week actually hasn't seen much of on-ground demand as well come in for the metals. That continues to weigh onto this level. Going forward in 2024-2025 is where the banks and brokerages are expecting the demand to start picking up. Until then, there could be a choppiness. Markets will continue to react to every rate hike or every monetary policy that we see there. Let's get in then Kunal Shah of Nirmal to get a sense on how you should be trading many of those commodities now. Kunal, hi. First up with metals, and even as the global markets are kind of steady or consolidating, Indian markets reacting to the depreciating rupee. But how would your trading strategy be from here on?
Well, I think it's a sell and rise market for commodities. The way Federal Reserve has clearly indicated, their stance going forward is going to be very hawkish, and that's not a good news for commodities. The only thing which is going to prevent the sharp depreciation is that the Federal Reserve refused to sell the mortgage-backed securities. So they were supposed to sell $35 billion worth securities into the market. So that means that the liquidity conditions are not going to get tighter immediately, and hence we are not going to see a sharp capitulation. Apart from the US, the scenario in China is more scary right now. The way the slowdown is spreading. So even though China is coming up with a lot of stimulus packages, they are following the easy monetary policy, but I think they are not going to get the same amount of result out of these policies. So it's not a good news for commodities as the demand growth continues to slow down in the Western world. The demand growth continues to slow down in China. So we are not going to see any major bullish trend in commodities, at least for the next 3 to 5 months.
Kunal, what's your sense on gold prices? Because while yesterday, we didn't even see a knee-jerk reaction come in for gold, but that seems to be coming now, $15 down on the screen.
For gold, it's getting more clearer because in near term, it may not move up. The reason for that is, so if I'm a money manager at US and I'm getting 4.5%, 5% in US banks, why would I invest in money? And that's the reason why there is a major redemption going on in gold ETFs. So there is a constant redemption from last 2.5 to 3 months in gold ETFs, and hence gold futures are coming down. So in near term, gold may not be able to perform. It can test levels of 1650 to 1630 on the downside maximum. But as and when the job market, like Fed yesterday said, they are expecting job market to weaken going forward. The housing market also to show some weakness going forward. So the moment the fear factor arises, at that time gold will shoot up abruptly. So in near term, I think gold may not move significantly up, but from the 2 to 3 months horizon, I think there will be a bottom place for gold. And I am bullish for the year 2023 for
Okay.
the outlook of gold.
Kunal, we'll talk to you about the rupee as well, because we seem to be making newer lows onto this 180.80 on the screen right now. Surprisingly, there's no RBI intervention. Markets were anticipating that. But clearly, when you look at the other Asian currencies in last 1 month, rupee's decline has perhaps been the least. But from here on, what is the sense now?
Okay, so now everyone is, most of the currencies, so our neighbors, each and every currency, China, if you look at every currency is weakening, and it seems that the dollar index is also going to strengthen further. So it makes sense for our central banks to wait and then intervene rather than immediately intervening, because I think the dollar index is clearly going to move up from here. I'm expecting dollar index to test levels of 114 in perhaps 2 to 3 weeks going forward from here. So when the dollar index is going to strengthen, I think there is further depreciation left for rupee, and I'm expecting Indian rupee to test levels of 81.50 to 81.80 going forward, and perhaps those would be a better level to do intervention rather than right now. So that's the reason why, in spite of 1% depreciation today, we are not seeing any intervention, any signs of intervention by the central bank, and I think the rupee is going to depreciate further. Till the RBI meeting, we are going to see some more depreciation in the store.
All right, biggest one-day decline in last 7 months and still declining in case of the rupee. But that clearly is the way that we are looking at some cushioning when it comes to the Indian commodity prices there. Kunal, thank you so much for joining us with your sense on currencies and commodities. With that, out of time on the show, Business Lunch will take all the action forward.